What's going on, my fellow wealth creators? Matty Ice here. I wanted to do a video talking about why I believe, and I'm really grateful that I purchased my car this way, but why I think the best way to purchase a car is with a dividend-paying whole life insurance policy. Okay. Now, if you're a Dave Ramsey follower and you're just biased against whole life, go ahead and click out. I would suggest you don't, because I'm going to provide you some really good information about how it actually works. Dave straight up lies about whole life insurance so that you'll buy into his buy term and invest the difference narrative. It's really frustrating. Anyways, I want to talk about why I think it's the best way to buy a vehicle. There's a number of different reasons, but I was watching a video that I'm going to show you here in a minute, and it really just got me thinking about some of the financial principles I've learned over the last 6 to 9 months, going down this rabbit hole of infinite banking and dividend paying whole life insurance and all this stuff. And just thinking to myself, why was I not taught these things earlier on in life? Like I could have avoided so many mistakes, so many problems I created for myself. Like I drove my life into the ground. I made so many bad decisions with my money. I was super broke not that long ago, only about 4 years ago. And it wasn't until I not even started thinking outside the box, I got out of the box. Okay. Like I just, everything I had been taught, this is not working. And I think what's happening right now in our country and with the economy, people losing their jobs, people can't afford this, they can't afford cars, homes, food, whatnot. I think it all stems back to, or all leads back to, a lack of understanding about money and how to build a really strong financial foundation. We're taught, go to school, get a job, go into a massive amount of debt to go to school, get a job, then go into more debt buying a home, then get into more debt buying a car, start a family, and hopefully you'll have enough money for retirement, right? That's kind of the narrative. And I just don't see that working for anybody. Like when I see stuff like this that I'm going to go through right, in a second here, you know, that narrative is just not working for so many people. And it's really frustrating because all this stuff can be avoided, at least mitigated to where it's not as bad. You know, like if you fall on hard time, everybody falls on hard times, you know, and hopefully in the long run, we take lessons from it and we grow from it, right? That's important. I know I certainly did. But what if we could avoid a lot of the potential problems with just a basic understanding of money and different financial vehicles that we can use to build a powerful financial foundation that I'm not going to say makes us bulletproof, but pretty darn close. Because all the stuff I see happening right now with inflation and whatnot, it sucks. It's really annoying to see things get so expensive. But because of the principles that I've learned over the last few years and the foundation I've put in place now, I sleep pretty good at night. Like we should be able to navigate an inflationary system like this, but we're not taught how to do it. Like, and that's a big part of my mission with this channel, is just to share these principles with you guys that I've learned that have really made such a huge difference in my life. Number one being creating multiple income streams for yourself. When's the last time you were taught how to do that? And I'm actually putting a course together right now in my infinite banking community. If you want to check it out, I think I'm going to call it the income multiplier, where it's basically how I created multiple income streams in my life. Because here's the problem with a lot of the stuff that I'm going to show you here too, is people only have one income stream in their life. What's it called? A job. What happens if you lose your job? It's not uncommon, not these days anyways. I mean, I'm seeing articles all the time about this company laying off 20% of its workforce, this company laying off XYZ amount of employees, whatever. So, you know, it's not looking too good for the job market. Now, if you watch mainstream media that tell you, oh, you know, market's doing great, unemployment's at its lowest in history. I don't know how much of that I believe. I don't know how much of that you believe, but we need to create multiple income streams so that we can insulate ourselves from all of this chaos that is happening. I mean, do we really want our financial future to be put in the hands of a company that can lay us off? I mean, I'm not saying not to have a job. I'm saying, is there a way for you to monetize your skill set in multiple different ways? The answer is 110% yes, you can, but you're not taught how to do it. Are we taught how to build a really strong financial foundation before we start going into all of this debt? A lot of people don't even understand how debt works. And I didn't either. I was somebody that did not understand how debt works, and it crushed me and it sucked. And it makes me sad to know that people are going through that when it can be avoided. And we can set things up in a way that protects us from the type of chaos that's going on right now. Inflation and things like this. So let me just go ahead and I'm going to share my screen. So this is a channel that I follow, not religiously or anything, but he does have some good content on here. So shout out to John Williams. This one was pretty good. It's a little clickbaity for me. 200 million cars to be repossessed. I don't think that's actually going to happen. He makes an interesting case for it with some of the articles and videos that he's sharing. But I think what this really means, though, is that people are being priced out of being able to afford a vehicle. And you can go down the conspiracy theory rabbit hole if you want, on why that is, if it's done intentionally. I'm not going to go there. I don't think that's a very productive conversation, to be honest. It's just, what are we going to do about it? That's the real question. What are you doing about it to make sure that you are insulating yourself from this stuff, right? Protecting yourself. So I want to go through just a few parts of the video. I'm not going to go through the whole thing, but just a few things that resonated with me that I think are important.
Now being worked on to make this come true. 80% of all cars being ripped off of the roads in America in the next 6 years.
Car payments are also accelerating towards record levels.
The average monthly payment for a new vehicle is now more than $700 a month and more than $550 a month for a used one.
That's so crazy. Over $700 a month just for a vehicle. That doesn't include insurance. That doesn't include gas. I've tried to fill my car up the other day. I thought $50 would do it. Nope, didn't even fill it up. And I put premium in my vehicle too. So it's like $4.05 a gallon. Like you add that on top of the car payment, plus food is really expensive right now. Energy costs are going up. It's like, man, people are being stretched to their limit. And if you don't have multiple income streams in place, if you don't understand the basics of money, if you don't have a really strong financial foundation in place, you're really putting yourself at risk to major hardship, where we're going to see here, like people are behind on their loan payments, their car loan payments. Repossessions are taking place, all that stuff.
Americans are having trouble making the monthly payments.
Subprime borrowers were at least now 60 days late, rose by 6.1% in September. That's the highest level since 1994.
So only the top
20. Yeah, 60 days late. I mean, that's just crazy. There was one other thing I wanted to point out is in an article that he brings up. I'm just gonna pull that up really quick. Yeah, right here. I think this was a Forbes article right here where it was talking about millions of people. Like cars have become unaffordable for millions of people, basically. And this really, here's why this resonated with me, guys, and why I wanted to bring it up, because I actually purchased my vehicle using my dividend-paying whole life insurance policy. It was a few months ago now, and I'm so grateful that I did it, and I'm so grateful that I learned the true power of dividend-paying whole life insurance, because I believe 100% that it provides the best financial foundation that we could ever ask for. Because, and look, when you listen to people like Dave Ramsey, like I wouldn't listen to Dave Ramsey. He straight up lies about whole life insurance. It's really frustrating. I've done a couple videos on that. If you don't believe me, you can check it out. I'll link it down below in the description. Pretty entertaining. Anyways, I purchased my vehicle using my policy. And basically the way it works, if you're not familiar with how whole life insurance works, you have the death benefit, because it's life insurance. So it would pay out an income tax-free death benefit to your beneficiaries if you were to pass away unexpectedly. That's really good. Very important to have. The other part of it, though, is there's a savings component to it called cash value that you can actually borrow against to take care of emergencies, to purchase a vehicle, acquire real estate, purchase assets, income-producing assets, hopefully, right? So you can actually use your policy to build wealth. This is typically called the infinite banking concept. I'm a huge advocate for it. I have tons of videos on it. I'm not going to go into it in too much detail in this video, but again, I'll link everything down below if you want to learn more about it. I do recommend it. But so I took a policy loan against my cash value to purchase this vehicle. Okay. Now, why would I do that? Well, there's a number of different reasons. One, there's no credit check. There's no application. You don't have to get approved for anything. I literally log into my portal. I told them how much I want, and it was in my account in 2 to 3 days. Done. I didn't even need to explain the reason for the policy loan. Okay, that's number one. Number two, my policy loan rate right now is only 5.5%. I looked this up. Let me share my screen again really quick. Like what the average interest rate on a car is today, saying 7.18%. I actually think that's a little low, but maybe it is, maybe it's not. I remember though, before I got my policy, I was just getting quotes on financing and it was in the 12 to 16% range. And my credit's not that bad. It wasn't that bad at the time. It's good now, but it wasn't that bad either. And it's because interest rates are really high right now. But, you know, but like the gentleman in that news clip in the video that was saying like subprime loans are, you know, people like they're behind like 60 days or whatnot. It's the highest in 30 years. You know, look at these interest rates here. I mean, 20, 23%, you know, maybe it's 15, 16%, like whatever, 12%, even if you have good credits. I mean, it could be upwards of 12%. That's really high. So would you rather pay 12% or 5.5%? I'm going to take the 5.5% all day long. Right. But so that's another reason. And here's the thing, that won't always be the case. Like if interest rates were to come down, then you might actually pay a little bit more on your policy loan rate than you would if you were to get financing through a bank for your vehicle. Okay, fair argument. Here's the other thing though. Here's one of the main reasons why I'm so grateful I purchased my vehicle through my policy, because I essentially purchased it with cash. But let me back up. I took the policy loan, had the cash, paid cash for it. So there's no lien on the vehicle at all. I do want to pay the policy loan back, and I set an amortization schedule for myself to do that. But here's the thing, guys, is there's no structured loan repay. It's not a structured loan. I don't have any loan repayment requirements. I don't have to make a payment every 30 days. It's on me to pay back the loan how I see fit. So I could pay more 1 month. I could pay less 1 month. I could not pay for 6 months if I fell on hard times, which is what a lot of people are doing right now. How nice would it be if you were able to call up the bank right now? Let's say you have that $700 a month car payment right now, and you just can't afford it. Well, what's probably going to happen is, one, it's going to hurt your credit pretty bad. And then two, it might end up getting repossessed. What if you could call up the bank and say, you know what, I've fallen on hard times. I'm not going to make a payment for 6 months until I catch up. I mean, they would think you're crazy. Like, no, you can't do that. Maybe you can apply for some type of hardship program, but you have to apply for it. You have to get approved. There's no guarantee that you will. What are the stipulations, the terms and conditions of that as well? Like, nonsense. We don't want to deal with that if we don't have to. With a policy loan, I don't have to pay the loan back on any specific schedule. You want to, okay, that's a whole different video. But my point is, if I didn't make a payment for 6 months on that policy loan, there's nobody coming to take my car away from me. There's nobody coming to repossess it and tow it away. I could pay everything back tomorrow if I wanted. Well, you can do that with a bank loan anyways, but or I could go 6, 12 months without making a payment. Maybe I want to make a payment, but maybe I want to lower my payment this month. Like, there's flexibility there. And so even if I could get a lower interest rate, let's say I could get a 4% interest rate on a car loan, I would actually still want to pay a little bit. I'd want to pay that 5.5% for the flexibility of how I can make the loan payments back and not have to worry about my vehicle getting repossessed. That's why, like, for me, it's such a powerful way. It is the most powerful way to buy a vehicle. Because one of the reasons anyways, because of the things that I've just discussed. Here's the other thing though, is let's say you don't have a car loan and let's say you paid cash. Here's the problem is you just dumped a bunch of cash into a depreciating asset. And that cash is no longer going to earn another penny of interest for you in your life ever. That is called lost opportunity cost. I want to show you this. I want to show this to you guys. Let me pull up. I'm going to pull up a compound interest calculator. And the reason I'm bringing this up, guys, is because even though I took the policy loan to purchase my vehicle, I borrowed $28,000, paid $28,000 cash for my vehicle. That $28,000 though is still in my dividend-paying whole life insurance policy right now, earning 3 to 5% net tax-free compound growth for the life of the policy. That's how these policies work. They typically net 3 to 5% tax-free compound growth as long as you have the policy, in addition to having the death benefit as well. So I'm not losing I don't have that lost opportunity cost anymore, because that $28,000 I borrowed was the life insurance company's money, not mine. That my $28,000 is still in my cash value, getting that uninterrupted compound growth. When you pay cash from your checking account, if I were to do 28,000 cash instead of putting that into my policy first, that $28,000 is gone forever. Versus if I just add one extra step before I purchase the vehicle, which is setting up that dividend-paying whole life insurance policy, I fund that policy first, then take the cash out in the form of a policy loan, then buy the vehicle. That $28,000 is still getting that uninterrupted compound growth. Not to mention, every time I make a payment, it restores my cash value. Again, it's kind of like putting money back into my own banking system, versus if you pay money, if you finance the vehicle, all of your payments go to the bank. It's gone forever. You can't call the bank up and say, hey, all the principal that I've given you over the last 6 to 12 months, yeah, I want to use that again to go take care of this emergency or buy this asset or whatnot. They're going to think you're crazy. You need to get a new loan. You can't, you got to go through the application process all over again. With a policy loan, it's not the case. Every time I make a payment, the principal is restored in my cash value immediately, so that I can access it again. It's so powerful. But I want to show you the power of lost opportunity cost, how compound interest can actually work against us very, very significantly when we pay cash for these types of things. So we'll use my vehicle example, $28,000. Let's do. So I'm 35. Let's go out 40 years till I'm to when I'm 75. Maybe I'm retiring, whatever. All right. Let's do 4% interest. So we're assuming that the $28,000 you could earn at least 4%, which is pretty standard in these dividend-paying whole life insurance policies. Like I said, 3 to 5% net tax-free compound growth. All right. So we'll just use 4%, and then let's calculate this. This is a staggering number, guys. So the real question here is, if I did not fund my policy first, if I didn't put that $28,000 into my policy first, and I used it to pay cash for the vehicle, did the vehicle actually cost me $28,000, or did it really cost me $134,000 over 40 years? Because that $28,000 would no longer be able to earn that 4% for me every single year, because I've given it away to purchase this vehicle. Versus if I just add one additional step in the beginning, before I purchase the vehicle, that money is going to continue to compound for me for the rest of my life. And this is true lost opportunity cost, guys. When I learned this, it just blew my mind. Like, this was such a light bulb moment for me on how powerful compound interest is, both when it's working for us and it's working against us. So I'll go ahead and wrap up there, guys. I've done a lot of different trainings on this. I don't want to get into too much detail. I'll link everything down below. But, when I was watching that video, it just really made me think about the things that I've learned so far, and my experience purchasing my vehicle the way that I did using my policy, and how much of a difference it could be making right now in so many people's lives. If they just knew about it, if they just had the information, like, hey, here's all the benefits you get. Here's the pros and cons. Here's the risks. Here's all the things that it can do for you, and then make a decision. Maybe it's good for you. Maybe it's not. It's not right for everybody. But I think if we had a financial foundation like this, it would give us so many more options. It would protect us a lot more. And, in this particular case, we wouldn't have to worry about somebody coming to repossess the vehicle, because, if we've fallen on hard times, we can't make a payment for a few months, nobody's going to take our vehicle, right? In this scenario, if we had this foundation in place. So anyways, I hope that was helpful, guys. I would love to hear your comments, feedback. If you have any questions, drop them down below. And if you want to have a conversation about, potentially setting up a policy for yourself, I'll have a link down below to our calendar, and, let's have a conversation, see if it's a good fit for you or not. All right. Either way, be safe out there. I hope you're doing well, and I will talk to you in the next one. To your success. Matty Ice is out.